Welcome everybody to Fast CPAs and Consultants. A warm welcome to our CPA Fulton Abraham Sanchez as well. Good afternoon, Fulton.
Good afternoon, Monica. Thank you for having me.
No, please. As everybody knows, in this video series, we are talking about different tax strategies that you must follow according to your situation. And we will answer the questions received through our social network or the ones you may put in the comments, or maybe you can send to our email address. In this video, we are talking about the best business entity for real estate investment. Fulton, shall we start?
Yes.
Perfect. So the first question we received is, what business entity is best for real estate?
For real estate, for rental income, whenever you are planning to rent a property, buying a property for renting it out, is a limited liability company on LLC. The reason of this entity classification as an LLC is because real estate, renting real estate is a passive activity, meaning you do not need to do anything to make money. You just need to, you don't need to do any activity. You just buy the property and the property will produce money. So that is called passive activity. It's different from a business where you work in a restaurant or a professional, you work physically and mentally to produce income. That is an active business. So whenever there is a passive business like real estate, rental real estate, the best entity is a limited liability company.
Okay, so is LLC or S Corp better for real estate?
It depends of the activity. Coming from the previous question, the LLC is good for a business that is doing rental, either commercially or residentially. Whenever there is flipping is when you buy a property, you fix it, and you sell it out, then the LLC is not the best. It's not the best structure. For flipping, it will be better than S corporation, for the simple reason that, as I remember the classification that we said before, whenever you have an activity, whenever there is an active business like fixing a property, classify as a passive activity, but as an active business. Active businesses will create a 15% additional self-employment tax if you use the limited liability company classification. So limited liability company classification works best for rental income, either residential or commercial. For any other type of activity, like in real estate, like flipping, like buying a house, fixing and selling it out, it will be an S corporation because this is an active business. S corporations, when they hold an active business, there is no self-employment tax, additional 15% that you have to pay.
Okay, understood. And should I start an LLC for real estate investing?
Yes, if it is for a rental income.
Okay, only in that situation.
Yes. Now, this is also tricky. If you are doing that and you have an LLC with one person, it will not work. One person LLC is disregarded both by the courts and by the IRS. And there is a case already in Florida that the judge, not because of the lawsuit that the tenants brought against the owner of the property in the LLC, the judge not only took the property for compensation of the plaintiff, but also took the personal property of the owner of the LLC to satisfy the judgment. So if you want to assure yourself that you will enjoy, that you will have the limited liability protection of the limited liability company, you must have at least 2 people in the company, 2 members. Otherwise, the LLC with 1 member will be a disregarded entity, both for the courts or by the courts and by the IRS.
Okay, got it. Quite tricky. And what is the best business structure for rental property?
For rental property, it's definitely an LLC. Now, this is where you have to decide. I've seen clients that they prefer to have one LLC for every single property. I have clients that they have even LLC for every single business, for every single store. It is easy that way because in the case of the stores, in the case of the property, it's easy to sell them. You don't have to, if you sell either the company or you sell the property, that's easier. I've also seen clients that they have made one single LLC. The key is the amount of insurance, liability insurance and umbrella insurance that you must have to cover your risk. That's one. Second, the number of members in the LLC. You have to have 2 members in the LLC. And this is even more critical if you plan to have multiple properties within the LLC. So if you plan multiple properties within the LLC, you have to have insurance, liability insurance, and umbrella insurance enough to cover all your risks, and also the LLC have to have 2 people as members. The problem with multiple properties within an LLC is that if anything happens, the property, one property, if anything happens in one property, the other properties will also be subject to the same risk as this property because they are all within the same structure. I've seen clients holding 40 properties in one LLC, other clients holding 197 properties in LLC, and they decide they design the structure of the LLC specifically to protect the risk by using something that is called a land trust. A land trust limits the liability, limits the possibility of commingling the risk from one property with another property. But you have to be very careful in structuring this with multiple properties within the same company. So this is good to have a real estate attorney that is very well versed in designing the land trust for the benefit or for protecting the individual investments within the LLC. For the particular case that I am referring to, the LLC includes many properties, and then for each property, one land trust is created. And the benefit of that trust is the property itself. Therefore, if anything happens with that property, because there is a trust, it will be protected. It is very important that if you go for this design, for this structure, the design of this kind of a structure, you talk with a well-versed attorney and a well-versed CPA in real estate matters. The option to this will be to have one LLC per property, and you don't have to think in anything else. The downside of that is that you will have to pay for multiple tax preparation of returns because you have many companies that involve the preparation of a tax return. But that cost is minimal if you are facing a big risk. So don't try to cut corners. And if you want to have things easy, just create one company for every property within an LLC with 2 members.
Okay, understood. And can a real estate brokerage be an LLC?
It can, but it will be better if it's an S corporation, because remember, when you broker something, when you are a broker, you are providing professional services. And professional services are active business, and active businesses within an LLC creates a 15% additional self-employment tax. So better create it as an S corporation.
Okay, understood. Can I live in a house owned by my S corporation?
No. If you're a U.S. resident, yes, you can, but you are losing the homestead exemption that is up to $50,000 lower from the value of the property that will help you to reduce your property tax, your annual property tax. One second, if you are buying, that's one downside. Second, if you are buying the property with a mortgage, the banks will not allow you to buy with an LLC or an S corporation. So definitely no.
Okay, got it. And how do I transfer my rental property to an LLC?
This is done with a good attorney, real estate attorney, or attorney versed with real estate. You do that through the transfer with something that's called a deed transfer. Now remember, you can only transfer your company if you live in the property. You are losing the homestead exemption of $50,000. For example, in Miami-Dade, it's $50,000. You are losing that, and your taxes, property taxes, will be higher. So that's one sign. Second, you can only own your house in an LLC or you can only own your house in an LLC if the property is fully paid, meaning you are buying the property cash. If you are buying the property with mortgage, the bank will not allow you to transfer the property to the LLC or transfer the mortgage, because when you have a mortgage, when you have an LLC, there is no limit, there is no personal guarantee. The bank will not be able to attach the property because it doesn't belong to a person, it belongs to a company. So there is no guarantee is not in, it will not be able to attach. Therefore, you can only you can transfer the property to the LLC only if you have it fully paid, and only if this is a rental property. Now, if this is a rental property and you own it personally with a mortgage, what you can do is transfer not the mortgage, but you can transfer the property through a deed. You can deed the property to the LLC, and in that case, you will hold the mortgage personally, but the LLC will hold the property through the deed that has been executed to transfer the property. So yes, you can transfer your rental property to the LLC, even though the property is mortgage. But you will not be able to transfer the mortgage to the LLC because the bank will hold you responsible for that mortgage. Because the property has a lien, has an attachment, has a lien to the mortgage, you cannot. The only thing that you can do is transfer the property through a deed to the LLC. A good attorney will be able to help you.
Okay, understood. And can I form an LLC and pay rent to myself?
Yes, you can, but you have to report the rent as rental income in your personal tax return. So there is no brainer. Yes, but you have to pay. You have to report the income because you are receiving income from the LLC.
Okay, and can an LLC own multiple properties?
Yes, that's not a problem. There is even something that is called series LLC, meaning that this is a special classification. It has not been tested here. The problem with this new, let's say, structure, as I said before, you can own many properties in one LLC, but you have to have insurance, you have to have a umbrella insurance, and you have to have 2 people in the LLC, right? You can also have one property within one LLC, or you can have what is called a land trust, that it will be the beneficiary of the property in that case, if you want to have many properties within the LLC. Yes, you can hold as many properties as you want, but remember the risk. There are other options that is called series LLC. The problem with the series LLC is that it has not been tested in court. So even though the series LLC exists, and to put it very simple, is like there is an LLC, the series LLC is created like within sub LLCs within the master LLC. And because there are sub LLCs, you place within each sub LLC one property. Therefore, you limit the risk to that property sub LLC. Problem with that is that the serious LLC has not been tested in court. So we don't know what will happen if someone takes one of the properties from the sub LLC to court, because it has not been tested in court. Once that happened, that the structure itself has been tested in court, and there is a legal clear horizon of what will happen if someone is using or it's building the company as the LLC as a serious LLC with multiple properties, with each one within one sub LLC. At that point, I will not recommend to use a multiple serious LLC.
Okay, understood. Am I self-employed if I own an S corporation?
No. If you are an S corporation and you are operating the S corporation, you are supposed to pay yourself salary. What happens if you don't pay salary, even if something nominal, representative? The IRS can audit you at the company level and the personal level. So just play safe and pay yourself a salary, even if it's $500 a month.
Okay, got it. Can an S corporation have no employees?
No, you have to have an employee. Even if you are considered an employee, and pay yourself a salary.
Understood. Can my LLC pay me rent for home office?
Yes, yes it can, but you have to report the rent as rental income in your personal income tax return. Don't forget that, because I've seen forms that they say the LLC, the company, LCS corporation, whatever, corporation pays me a rent and that's it. No, if your LLC, if your company, for example, you rent a house, and in the garage or in one of the rooms, you have a business. And because of that, you say, okay, so my company is using X amount of square feet of my house. I'm gonna have my company pay rent for that portion. So there is rent that the company pays to the owner of the property, and it's also rent that you pay to the owner of the property. The problem is that you are reducing your rent. Even though the company is paying the rent for you to the owner, your rent is reduced. So that portion that is reduced from your rent, because that is not your real rent, you are supposed to report it to the IRS, because it's a rent reduction.
Okay, understood. And we have here our last question. Can an LLC own itself?
No. Someone has to own the LLC. Either a person, either two people, or another company, another LLC, another corporation, another S corporation, or even a foreign corporation.
Okay, got it. Well, those were the main questions we received. Thank you for joining us. And of course, thank you, Fulton, for sharing, as always, your knowledge and your time. And remember, everybody, to follow on our social networks, like in Facebook, where we have an exclusive group. You have the link in the description of this video. And be sure to subscribe to our channel so you can be notified when we publish a new video about taxes. Thank you again, everybody, and see you in the next video. Bye-bye.
Thank you, Monica. Bye.